2022 was a brutal year for some major widely followed blue chip investments. You won't believe how some well-known investments have performed last year. We're going to be talking about Meta, Twitter, we'll even talk about Match.com. And you guys will not believe, wait till you see how Tesla has performed so far year on year. We'll even talk about some commodities and of course take a look at the tribulations of Bitcoin. So here are 10 big name declines that happened over the last year. This is a chart of Facebook. Now it's Meta, but it was Facebook. So you know what company I'm talking about. And I do a 2-year chart so you can see the true decline and what's really going on with Meta. But notice the trading volume. This is when everybody was jumping off the ship. From a high just south of $390 per share, within about a year and a half, those shares came down to $120 each. This channel is about your economic survival because I believe that the mud has already started hitting the fan. Of course, if you've been watching this channel, you would have gotten out of the way of that derailing train. Probably too early, but you would have got out of the way of the derailing train nonetheless. This is a chart of the FTX token, FTT. And you might have heard something about Sam Bankman-Fried on the news. That has to do with all of this. Or should I say all of this has to do with that. But right there is when dishonest delusional structure was exposed. And it changed everything. It was already falling for a while. So if you figured out why it was falling, you might have known to get out before this train hit the wall. You can ignore this chart, that's just showing you coffee. But here are many of the commodities. And you want to see how they're performing? What's done best this year? Orange juice up 38%. But let's flip it around. What's the least well-performing commodity in 2022? It was lumber. And do you remember when lumber was driving up the price to build a home? It was an actual concern for anyone who was building pretty much anything. It's good to see lumber prices coming down so significantly. Counter inflationary concerns. The market is normalizing naturally on its own. Oats are down 47%, cotton down 28%. Good news for all of us, coffee is down 27%, and rubber, which is made from oil, is down 24%. And this is the only 3-year chart I'm showing you today. This is a 3-year chart of PayPal. I wanted to show you the rise and the fall. But notice the difference in the trading volume. And what's going on here is a consolidation where the shares may be trying to find a bottom and you have a massive turnover of investors, a turnover of the shareholder base. More investors are buying now for the first time and newer investors are less likely to sell anytime soon. They expect the shares to go much higher. There's a lot of people who didn't jump out when they should have, and now they see their investment declining pretty quickly, and now they want to just get out of it. They just want to take whatever gains they still have, and that's what happened here. And now you've got a consolidation of sideways trading that I always tell you about, range bound, which there's a huge turnover of shareholders the longer this goes, and the more the turnover of shareholders, the greater the percentage of them who are not willing to sell or not interested in selling anytime soon. What happens after a consolidation period like this, typically the shares establish a bottom, and once they do that, then there's a lot of upside longer term going forward. I have a very negative outlook for the overall stock market, I understand that. But what I'm trying to show you is if you're going to be getting into trying to invest now, some of these opportunities that you're trading for much lower prices than they used to, first of all, which doesn't actually matter. It doesn't matter if the stock was at $10,000 per share. Now it's at 75 cents. That's not representative of a good value. There's a reason that the shares came down like that. So you can't look at previous prices and think that tells you anything at all. But nonetheless, if you're looking for a good consolidating opportunity for long-term investment, trying to jump in on these shares when they're down right now, this may be one of the shares you want to keep an eye on going forward. Nothing in this video is intended as personalized trading advice for you. A lot of the content and data in this video comes from tradingeconomics.com. This is a 1-year chart of JP Morgan. And right there is when they came up with really brutal financial results. And from that point, it was nothing but a downtrend until very recently. And as interest rates rise, that's good for JP Morgan. So that would have come into play a little bit, but they're getting their train back on the tracks. That's a good thing. And I think I have to disclose that I own shares of JP Morgan. I bought them right there. Here's the performance of many fuel sources and types of fuel. Coal was the best performer in the last year. But what's doing least well? Propane, ethanol, natural gas, oils. This is a chart of Match.com. It's a 2-year chart. I'm doing 2 years when it shows you better what I'm trying to display. This is a stock that was trading at over $180 per share, and now it's down to $40 a share in relatively quick order in the big scheme of things. But the metals, I'm always talking about gold. What did best? Lithium did best this year. Gold was only up 0.91%, so not even 1% year over year, which means it held up pretty well compared to most investments. It preserved your wealth while a lot of other investments got less expensive for you. But to be clear, I know I'm always very early. I believe that gold prices are going to go this year. They're going to finally do what I've been expecting them to do for quite some time now. Potatoes are up 42% year on year. And that's the biggest increase from any of the commodities. Lumber's down 67% year on year. This is not screaming out of control inflation. None of this. Please consider subscribing to this channel right now. Click on the alert bell so you don't miss any of these videos when they come out. That's a 1-year chart of Tesla. Notice the big increase in trading volume right there. That's the last of the weak hands getting out. I believe, and this is not personalized trading advice for you, that Tesla is going to find bottom soon and be a great investment long term. But let's do a 2-year chart of Tesla so you get a better view of what's really going on. Delusion, curtain being pulled back. And I'm not saying that against Tesla, the company. I love the cars. They're a computer on wheels. Everybody should be driving a Tesla. There's a big difference between a Tesla and an electric vehicle. But most people want an electric vehicle to not have to pay for gasoline. All these other companies doing electric vehicles now will take a huge bite out of Tesla's market. It was almost as high as $420 per share, and it came down within the last year and a bit to $105. That's a drop of about 75%. And we'll take a look at the cryptocurrencies here. Year on year, how have they performed? The worst was Terra, down 100%, Solana down 92%, and so on. But let me show you something. When you reverse the order there and you start from the biggest gainer year on year, and it goes down to the biggest loser year on year, there isn't a single cryptocurrency that produced any gain whatsoever from this list of a lot of the main ones. Here's a chart for Twitter, but it's being taken private by Elon Musk as of November 8th, so you can't even trade the shares of the stock anymore. And this chart goes up to almost when it went private, and you can see that there's a little bit of strain on the shares in the first place even before this transition happened. And this is a 2-year chart of Amazon. And Amazon really picked up. I can say that from my own perspective, where I used Amazon a lot more during the troubles we all went through. But then when things start to normalize, people go back to the way they used to act and operate. Things like high flyers such as shares of Amazon came back down. And they're caught up in the downdraft in the overall stock market, but the way people use their service actually declined quite a significant amount. And this is where a lot of people are going to jump in too soon and get burned pretty badly if they try to pick the bottom. I don't think this story is done playing out just yet because we don't even know which direction the story is taking. The issue that we dealt with and overcame recently is not over, which may mean that shares of Amazon go back to the way they were trading when everybody was using their service. This channel is about our economic survival, and now is the time to focus on this. 2023 is going to be an incredibly significant year for all of us. Please consider subscribing to this channel right now. Click on the alert bell so you don't miss any of these videos when they come out.